Hey everyone. So I wanted to kick the course off with market structure, and the reason being is this is the absolute most important concept. If you're going to get one thing right, this is the absolute biggest thing you need to get right. Learning proper market structure will allow you to get on the right side of things more often than not, and it'll ensure that you're trading in the correct direction most of the time. Now, market structure can be quite simple by the way the textbook examples are drawn. Obviously, as we get into the real market, things can get a little more hectic. So this is why we're going to do it in 3 steps. We're going to go over the textbook examples, then we're going to go into the realistic examples, and then in the next video, we're going to jump into actual market structure on the candles, where we'll do daily structure, then 4-hour, then we'll jump into 15-minute, and then I'm going to show you how all these times correlate together and how to use them properly to form an analysis. Now, the majority of our analysis is going to come from the 4-hour and the 15-minute to day trade. And our entries will come off the 1 minute with 4-hour and 15-minute structure behind us. So let's start. We have a lower low, lower high, lower low. So once this lower low gets taken, the highest point before this point gets taken is your lower high. The lowest point becomes the lower low. Pretty simple so far, right? We'll go here and same thing again. We have lower low, lower high, lower low. So we pull the highest point before the lowest point. And same thing again. Lower low, lower high, and we get another lower low down here. So every time we break one of these points, we pull the highest point before the lowest point before the impulse ends. Now, it's very important to note that these lows have to be broken by candle body close. It can't just wick below it and then shoot the other way. That is not a break of structure. The candle bodies have to close. It doesn't matter if you're going up or down, we need that candle body close. Now, on a more realistic example here, we have a lower high, lower low, lower high, and we kind of zigzag our way down and we put in a new lower low. Now, ultimately, these points are not all structure. They are what's called substructure, or you can even call them internal structure, if you will. They are internally contained between the lower high and the lower low. So I call them substructure. If you want to call them substructure or internal structure, that's totally fine. And basically, once this happens and we take this lower low, we are going to pull the highest point before the lowest point. Now, let's say this is a 4-hour chart that we're looking at. All this stuff here isn't structure on 4-hour. However, as we go down onto the 15-minute, this would be market structure. And again, we'll do examples of how to combine the two to do proper analysis. So in this case, we form a lower low. We have a lower high, which is the absolute highest point before our impulse down. And now we have another lower low. So the bearish trend is still continuing, obviously. Again, lower low, lower high, lower low, lower high, and we get a lower low. We will pull the highest point before the lowest point. And it's very important to get this concept right, because if you start mapping all these little areas as structure, it can get very confusing and you can get quite lost. And I'm basically here to make sure that doesn't happen and teach this as simple as possible. So on the bullish side of things, we have a higher low, a higher high, and another higher low. We then put in another higher high. So once this high is taken, we create new structure. Another higher high is created. This higher high now pulls back, creates a new higher low, and another impulse to the upside gives us a new higher high. So now we will map structure the exact same as we did before, except this time it'll be the lowest point before the highest point. So nothing really changed, just go in a different direction. Again, higher low, higher high, higher low, and another higher high. So simple enough on the textbook side of things. So a more realistic example would be something like this. Obviously, we have a higher low, a higher high, and another higher low. Once this point is taken, which does happen over here, we will again pull the lowest point before the highest point. So the lowest point being right here, the highest point being right here. All these points are substructure, and it is important to not map them as market structure. They are something, they can be used as confluence to trade, and you'll definitely be taught how to do that properly, but it's more important that you understand how to map structure properly. Now, as we made our higher high, and we zigzag our way down, create another higher low, impulse up, we create another higher high. So again, same thing. And we've made a new structure. Now we kind of zigzag our way down, even come back up and come back down. And finally we kind of have an impulse to the upside. Now a lot of people will mark this point as structure. That's actually not structure. It is the lowest point before the highest point. So it is very important you map this as structure and not this. And I'm going to show you why in just a second. So if this is your lowest point and this is your highest point, this is market structure. And as long as this low stays intact, you stay bullish. Now, had you gone and marked this point here as your low instead of the proper low, let's say hypothetically this came down and did this and just closed below that. Right away, you're just like, oh, well, we just turned bearish. It's time to start shorting. Well, no, you didn't turn bearish because this is actually your real low. This is not the right low. And it's very important you get this right. Now, something I want to talk about too is a confirmed trend versus an unconfirmed trend and a trend reversal. So we have the same textbook scenario here as you had over on the right. Bearish trend, and we have a bullish trend. For a bearish trend to be confirmed, we need two lows. One low, two low. This trend is now confirmed bearish. For a bullish trend to be confirmed, we need two highs. One high, two high. This trend is now confirmed. As soon as you have 2 points of structure, the trend is confirmed. Now, why this is important is I want to show you a scenario where we create a new high and we pull back. So this now becomes an unconfirmed bullish trend. Now, if we do not make another high and we just make another low from here, this basically becomes a bearish trend again. We failed to establish a bullish trend because we only made one high and then we came down and put in a new lower low. So this is still a confirmed bearish trend. Now on the flip side of things, let's say you have a trend that puts in a new high and you put in a second high. This is now a confirmed bullish trend. And this trend is more likely to continue since you have two high points. Whereas one high point, at this point, you're just like, okay, we could possibly have a trend reversal. So you'll start being open to buys, but you still have to be open to sells as well, as this trend is not confirmed. Now, on the flip side of things, it is the exact same with a bullish trend. If we come and create a new low, this now becomes an unconfirmed bearish trend. If we come back and just do this, this is still a confirmed bullish trend, as we failed to confirm a bearish trend. So we will stay bullish as we made a new high. Now on the flip side of things, if we come in and we put in two new lows, this trend is officially confirmed bearish and is more likely to continue down. It's very important to understand the difference between confirmed trend and unconfirmed trend, because the two will be used very differently in terms of risk management and direction of trades. Once a trend is confirmed, that's your highest probability to go in that direction. Unconfirmed, yes, that's your direction, but you have to be open to the opposite direction until the trend is confirmed. So we'll end this video here, and next video we're going to go into daily market structure on actual candles. I'll see you guys in the next video.